What's up guys, it's Static here, and this is going to be my first video on this channel, and the whole purpose of this channel is to spread trading education to anyone that's looking to get into trading. It can be a very daunting thing to get into, very confusing and stuff, but I wanted to create some videos to break down some basic things that you can learn that'll help you understand what's going on when it comes to the market and trading, anything in general. It doesn't have to be the stock market. It could be Forex, crypto, anything, right? These type of videos will be applicable to all types of markets. So that's the whole purpose of my channel, and we're going to be starting off with the basics, of course, but as the videos progress, we'll be looking into some more advanced things that will be covered. And if this type of content is something that you enjoyed, something that you've benefited from, please hit the like button, subscribe, and feel free to tune in for more content like this. Also feel free to comment any questions that you have regarding trading or anything that this video talks about. So with that out of the way, we can get into today's topic. Today's topic is going to be candlestick anatomy, and so the reason we want to cover candlestick anatomy first is because looking at a chart like this, it can be very confusing, right? So what we want to do is we want to look at the language that is being portrayed to us, right? You can't really start talking to someone in a different language before you learn the words of the language, right? You got to understand each individual word and what is being said before you can put together sentences in a conversation. So similarly, it's the same thing with the market, right? These candlesticks, each one gives us some sort of information that the market is telling us, and without knowing that, you're basically in deep waters, not knowing what's going on. So it's very important to understand what these candlesticks are telling us, because they each tell us something very important. So before we even look at this chart, we're gonna have to look at what the candlesticks mean. So I have this little graphic pulled up, and we can talk about and learn what these candles basically tell us. So before we even get into that, we want to understand what the anatomy of the candlesticks are. So if we're looking at the bullish candle, bullish means green, meaning the price is going up, and so these little things on the top and bottom are called, you can call them shadows or wicks. Everyone refers to them differently between shadows and wicks. I like to call them wicks. So those are the wicks, and this is the whole body of the candle, as you can see. Pretty intuitive to understand, and so this might just look like a rectangle to you, right, with some lines, but it's it's way more in depth than that, right? So you want to understand what it's saying. So when it says open here, that means that is where the price opened, right? So the price has started here, and as this bar goes up, when this candle closes, that's where the price ended. So it went from here to here, indicating that it went up, right? So that is what the body of the candle indicates. The price went from here to here. As far as the wicks go, it tells us where the price was in that time period, right? So if the price opened here, right, it tells us that in this candle the price went down to here, but it did not stay there. It was there at a certain period of time in the candle. However, as the candle continued to go on, it did not stay there for very long, right? And it's the same thing for when it comes to the high, the wick up here. It means that the price was up here at a certain point. However, it did not close here, because if it were to close there, then the body would be up here, and there wouldn't be a wick, right? So that's what that indicates. It means that the price was there, but it did not stay there, right? So that's basically how to interpret the bullish candle. Understanding that there's gonna be wicks on both sides, up and down, and that the price started here and ended here. So that is the bullish candle. If we move forward and look at the bearish candle, it's very similar. However, it's just reversed, right? And when I mean reversed, I'll explain that. So it means just like the bullish candle, it has wicks, the upper wicks and the lower wicks, right? And it's the same thing except for the price opens here, right? And I know it might be a little confusing that it's the opposite, but as you look at charts and as you have more screen time, this becomes very intuitive to you, because as the price moves, like you would see, let's say these candles were side by side, right? You would see that the price starts here, it closes here, right? And then it opens here and then moves down here, right? It just makes sense as you look at more candles. But let's go into the bearish candle. So what the body tells us is that the price opens here at this level, and there's a high that's created up here. However, it does not stay there very long, because if it did, then if it starts here and goes up here, it would be a green candle, a bullish candle, right? But that's not the case. So if the price starts here, it comes down and it closes right here. And since price starts here and it closes below its open, it becomes red, indicating a bearish candle, right? Your price is always it's always starting at a certain point, right? Whether the price goes up or down, it will be indicated whether like it's green or red, right? If the price goes up, it'll be a green candle, you know? But if the price goes down, then it'll be a red candle, like that. So based on where the price goes up or down, it'll be red or green. So that's the basic gist of what you want to understand with these candles. So the price comes down here, closes here, but there is a wick down here that is a low, right? So it means that the price came all the way down to this level, but it did not stay there for very long, and it closed up here. So that's how to interpret these candlesticks. It's very important for you to understand what it means for candles to not close. And you might think that these wicks are not very important, but they are very important because it shows where the sellers and buyers are, right? It shows, because if the price, let's take the bullish candle example. If the price is extremely bullish and people are buying, right? Imagine there's no one that's selling here, right? This candle would go all the way up to here. It would not have an upper wick. But the reason there is an upper wick is because there are some people that are selling into this buying, right? And of course, the selling is not like strong enough to where it would push all these buyers down, but there is some selling, and you need to understand that as you see price action move up, because this tells you that as price is moving up, there is some selling that is starting, right? And as we continue into this video, you'll understand how important wicks are and what they tell you. But that is the basic anatomy of candlesticks. So now we're going to be looking at some candlestick patterns. These are various patterns that are created as the chart moves up and down, right? And you'll see some back-to-back candles. It's not very important, in my opinion, to learn these exact names of these candles. It's more so the meaning behind them, right? I mean, I don't have all of these memorized, if I'm being honest with you. It's more so I understand what these candles are telling me in real time. So we need to understand what's going on here. And we need to use the knowledge that we've learned from our candlestick anatomy to deduce what price action is telling us here. So if we take the example of the bearish tweezers, we will see that, let's say you have a graph like this where price is going up, right? See price going up, and then you're starting to see these wicks. You don't see the wicks on this first candle, but as the price is going up, you start to see these wicks, right? These upper wicks. And like I said before, it indicates selling, right? Not a crazy amount of selling, because if there was a lot of selling, you would see price come down. But as you see this price action happening, you see this candle happen, right? And this candle is a candle that tells you that there's a lot more selling pressure here that's starting to happen. And when this happens, you need to understand that the buying is not as strong anymore, because if it was, then you would see a continuation up, right, with price, and these candles would be green, of course, right? And even though this candle might be green, you need to understand that since this has such a large upper wick, there's a lot of selling that's starting to happen here. And when you see this happen, you see another candle that happens just like this. I mean, of course, this is not going to happen every time, right? You'll see this large candle and you'll understand that there's selling pressure. So if you were in this trade, you would want to get out soon, because you see that heavy selling pressure is starting to take over. And when you see heavy selling pressure starting to take over, you would see a pullback, either a pullback or a change in trend, right? So this is one common candlestick pattern that happens, where you would see an uptrend, as you can see indicated here, right? An uptrend that happens as an uptrend is created, and then you see these large these candles are called shooting star candles, right? And what they indicate is a lot of selling pressure. And if we look into it, we think about it, it shows that price was originally up here, right? There was a moment in time that price was here, right? But because there's so much selling pressure, the candlestick gets shoved down and it creates this large upper wick. And what that means is that there's so much selling pressure here that price is unable to continue to go up here, and it closes below, right? And that tells you that, okay, look, if a lot of people are starting to sell, then I need to also get out of my position, because there will be a pullback or a trend change incoming. So that's very important to understand. Similarly, if we look at it the opposite way, these are called hammer candles, right? And this specific one is called a bullish tweezer, right? So if we look at it and just flip it, right, we have candles coming down, right, indicating a downtrend, right, just as this picture says. And then we see these candles that are created, right, just like this, these hammer candles. And what we end up seeing is that there's a lot of people buying down here, right? And what the reasoning the reason I come to this conclusion is because price went down to these levels. However, since there were buyers being created, the price gets pushed up, and the price closes up here when it should have closed here, right? If this is going to continue downtrending, then it would not close up here, right? It would continue to come down, right? But because there's buyers starting to buy here, you see that the price comes up and it creates these hammer-like candles, which indicate that a possible reversal or a pop-up will be incoming. And that's what you need to understand. These type of candles are similar to dojis as well. Dojis are just a little bit different because they don't have any bodies, as you can see. They'll just be just like this. But they indicate something similar in that there's heavy selling or heavy buying pressure depending on if it's an uptrend or a downtrend. So that's something very important to note. And as you can see, they talk about hammer candles here, and also shooting stars. So bearish tweezers and bullish tweezers are just like a combination of those two things. So that's something important to note as well. As far as spinning tops go, and you can also see there's something like that right here in this doji candle. Those type of candles are what we call indecision candles, and it's because buyers and sellers are fighting at the same time, which creates an indecision in price. And when that happens, it just means that there's uncertainty of what's going to happen next. So you want to use it in the context of what's happening in the market, right? So if you see a downtrend happen, right, strong downtrend, candles coming down, right, red candles, and then you see indecision right here, right? That means that there's still selling pressure continuing, right, because price is coming down. However, there's also an equal amount of buying pressure, which also indicates that, okay, since there's buying pressure that's equal to selling pressure coming down, you can see a possible reversal incoming in the next few candles, right? You don't want to just buy off of one specific candle, right? And this goes for anything here, right? Like, just because these candles are happening does not mean you should buy or sell it, right? It's more so something for you to look at to know that, okay, the market is telling me something and I need to be aware that something is going to happen next. And so that's what you want to understand. It's just like in a language, right? If someone says a word to you like I want, right? The word want means that they desire something, right? But if you just look at the word want, it's not going to be, that definition won't be consistent, because you have to know what the context is in terms of the sentence, right? It's the same thing with the market. If someone says I do not want, right, something, it means that they do not desire something, right? So just because that word want is in there doesn't always mean that someone desires something, right? You need to understand the context in which they're saying they want, right? Similarly, that's how it works with these candlesticks as well. Just because there's some like a bullish tweezer, right, it does not mean necessarily that, okay, price will reverse completely right here, right? This could also just be a pop-up for a continuation in a downtrend, right, where it just goes like that. So you need to understand the context in which you are looking at these candles. These candles are not the end-all be-all. Like, okay, you have this information and you can trade forever now. That's not how it works, right? You need to understand that these are just indicators of what the market is telling you. The market is trying to communicate to you, and you need to be aware of what the market is saying. And this is just one thing that you need to be aware of. And before I go, I wanted to go over some examples of what we talked about. So if we look at SPY here, this was on Friday, on the 13th here. So we can let's apply what we've learned, right, in terms of these candlesticks, right? So if we look at the market here, right, we see a strong uptrend that happens at the open of SPY, right? And then we see a pullback here, right? And then we see that SPY creates this candle, is this red candle, right? And anyone that's in this in like a FOMO trade would be like very scared, and they would want to get out here, right? Because it's obviously a very red candle, and you'd be weary of price action here because such a dramatic drop in price, right? And there's no wicks here either, right? Straight up, it's like a lot of selling pressure right here. But you see the next following candle, you see the large bottom wick, right? And that indicates that price came down to this EMA, right? And then it got bought up very quickly, right? Because if the price stayed here and it was weak, it would just stay here or it would break through. However, there's a wick that's created, and that means that there's buyers present at this level, right? And because of that, you know that this candle forms, and then you can see a continuation in it moving up right here. And so that's just an example of a hammer candle showing you that, look, because there's an EMA here and there's a trend forming, this is just a pullback, right? Once you see this candle form, you can understand that, okay, look, this is showing that the overall trend is still bullish, right? There's nothing super like scary to be afraid of, right? And you can take a trade here and ride it up, right? So that's one example of where you can see that. Another example is when you see the tops of these trades, right? You see like this, as we talked about, like a shooting star, right? Where you see selling pressure, right? There's barely any buying pressure here. You see the lower wicks, and you see that price ends up red here because it opens here and it closes here. It was up here at one point, but because there's so much selling, it was pushed down to here. And so you understand that, look, price is telling you that there will be a pullback incoming or even a trend reverse, right? Because there's so much selling pressure created here, right? So you want to understand that these candlesticks are telling you things, right? And you want to understand the context. So if this uptrend is created and this candle happens, you know that there could be a possible pullback, which it did happen, right? And then you see a continuation up. So these are things that you want to note when you're looking at these candlesticks, right? They tell you a lot of various different things, and you want to use them in the context of the market. Okay, so we're on 5/12/22. So this is the Thursday, and so if we're looking for examples of indecision candles right here, right? So let's say you see this trend and the uptrend and then the downtrend here, right? And you see this move happen, right? But you're starting to see some bullish candles, right? Some hammer candles, and then you see this little indecision, right? Where you see that the selling pressure is fighting against the buying pressure, right? So you want to be careful when you see this kind of stuff, because you see that there's still selling pressure here, right? It's not all gone just because all of this happened, right? There will still be selling pressure here. But because the lower wicks are so much bigger and higher than the upper wicks, you know that the buying pressure is still stronger than the selling pressure, right? You can see that the lower wicks are much greater than the upper wicks, right? And because of that, you can deduce that, look, we can see a possible pop up here because all of these candles combined are showing lots of buying pressure here, right? A hammer candle here, big upper wick, lower wick is present, however not as big. Same thing here, right? So you understand that there's buying happening here, right? And because of that, the accumulation of buying results in the price to come up, right? And because there's no more selling pressure left, you would see the price go up. So all of this, just, you have to understand that these are all imbalances that happen in price, and the candlesticks are just the ways, is just the method of understanding where price imbalances occur. And if you understand that, you'll know where price will be headed next. So that concludes this video. I hope this video was super helpful to you guys. If there's anything I can improve on, let me know. And if you have any questions, please feel free to comment about them. I'll be sure to get back to you in a timely manner. Thanks again for watching. Please like, subscribe, and comment. And I'll be looking forward to creating more videos about trading. Thank you. See you later.